Welcome back, folks. I am Jon Najarian, and this is 3 at 3. And we'll try to give you a little explainer as well about President Biden's latest statement about taxes, because man, did that move the markets. Whenever a president talks about taxes, it's going to move the markets. And this time it really moved the markets because we were pretty significantly positive, and then we went pretty significantly negative on news that he was going to tax wealthy Americans. I guess he says those are folks that make over $1 million a year. Long-term capital gains, in other words, holdings of a year or more. That used to be and still is until the law has changed, that used to be the measure of something that would be taxed at 20%. But instead, now he's talking about moving it up to basically par with ordinary income tax, which, let's say, the highest end, in other words, the number the millionaires would pay is about 39.5% in rough terms. So if you put both of those two, you would no longer have an incentive for the richest amongst us to hold for the long term. They would instead, if they're taxed at the same rate as short-term holdings, would likely make a lot more short-term trades, which would increase more volatility, introduce more booms and busts into the markets. But that's not what the president has been thinking, apparently. So once again, I'm going to disagree with, not with increasing taxes, but increasing them in the way that they're looking at in this case, I think would be detrimental to the markets, to the country, and likely would cause pretty significant pain. Today, it resulted in about a 300-point sell-off in the Dow and from a gain, and a pretty significant drop in the S&P and all of the major indices. But let's talk about the rest of this, and then maybe I can throw in a few more thoughts at the end of today's 3 at 3. 3 at 3, we bring you unusual option activity. And one of the bits of information we need to share with you is that what I'm about to present is for informational and educational purposes only. I am not your financial advisor. I am instead providing this for your edification. If you decide to act on it, that's your decision, and all investments involve risk. Intellectual property rights, we have registered marks, trademarks, patents, and copyrights on virtually everything you're about to see. So please ask us before you reproduce it in any form. Well, SeaWorld continues to work. You remember 2 days ago, I talked about this one on the halftime report, which I'll be back on there again tomorrow at 12 p.m. Eastern time. SeaWorld hit a high today, as you see there, not the 56.28 where it is right now, or when that shot was taken moments ago, but rather 57.40. So it's been a very nice run in here so far. And we're not saying it's over, but I have taken a lot of profits off the tables in SEAS, SeaWorld Entertainment. Likewise, Expedia. Why? Well, because we saw unusual call buying. I believe it might have been the same day. It was either Monday or Tuesday. The days kind of blur. But we saw unusual call activity with the stock at 168.89. In other words, let's call it 169. And they bought 6,000 of the May 170s, which is more or less the at the money. Well, where is it today? Again, look at this. Even with the market sell-off, 176.28, so call it $7 above our entry. And look at the high of the day, 180.09. So pretty nice move there, $11 higher. So again, if you put 1,000 shares on the table at 169, you committed $169,000, or if you're trading on margin, half of that, and you made $11 or $11,000. Now, on the other hand, if you bought options, which have gone up by 3 times since the entry. And you had a lot less risk. You defined your risk when you entered, because you can only lose in an option what you pay for it. I guess you could tell me you can only lose in stock what you paid for it too, but compare the 169,000 that you'd have in those calls, or I mean in the stock, to the 170 calls in May, and you get the idea that we put a lot less money on the table. We made a much higher rate of return, and we could sleep at night because we knew if the stock gapped down $10, we wouldn't have an extraordinary loss. We would have a minor loss because we're trading a derivative with just 1 month to live. Our daily crypto bite goes off every day at 10 a.m. Eastern Time. I am joined by Monty and CJ. They are 2 former Bitcoin miners. They're really in the space. We talk about Bitcoin, but we talk about, I bet since we've been doing the show a few months now, I bet we talk about maybe 30 different coins that we've bought in the altcoin space. Everything from Litecoin to EOS to Ethereum to Voyager token, VGX, a whole bunch of cryptos that we've traded, not just Bitcoin. If you'd like to join, that broadcast is free every day live. And of course, it goes over to our YouTube channel. But you can also join the trading room, which means 24/7 you have access to a room with charts and individuals who are like you, trading crypto, learning about crypto, and getting more involved in crypto. To try it out, it's $1 for the first month, not for a day, for the entire month. $1 for your first month for you to decide if it's right for you. That is marketrebellion.com/try crypto. Today's first contract that I saw unusual option activity in is American Tower, AMT. So you know what they do, sell towers, and they make a lot of money doing that. So stock's 251.5. That's a big stock, isn't it? Bullish call buying. They're buying the, not this week, not tomorrow expiration. That's the 23rd of April. They're buying the 1 week out, 30th of April calls, 255 strike. In other words, they didn't buy the at the money or the just in the money. They bought the 255s, approximately $3.50 out of the money, above the market. I always like buying an at the money and selling 1-to-1 and out of the money against it. So take a look at the chart and you see that March 8th, it bottomed at approximately just under $200, let's say. It has moved up to $252.99. So when we talked about it this morning, $251.50, it is now $1.50 higher than that, despite the market sell-off. So that's something that we like to point out to you, is that we're talking about one that is so strong that even the weakness in the market was not able to knock these guys down. That's a pretty big deal. So we're in these calls. I am in the calls in American Tower. They are calls that are struck out in, let me see. They're calls that are struck out in April 255 at the 30th of April expiration. So you've got a week. So you have to be nimble. So if these calls that if you decide to purchase them, if you decide to join us in this trade, be very aware that if we see a big move tomorrow, I will probably take off at least 50% of my trade. If we see a rebound in the market tomorrow, don't know if we will or not. We'll have to see how the world starts to react to higher capital gains, if indeed the president can get that from his mind to a bill that passes both House and Senate and then would come to his desk. It would likely be retroactive, by the way, so I'm not unaware of that fact. But if tomorrow cooler heads prevail and instead of the NASDAQ being down 1%, Dow down 1%, S&P 500 down 1%, if instead of that, we're moving to the upside. American Tower, which has fought the trend today, is likely to outperform again tomorrow. And I will likely take some profits because these options have 1 week to live. And we've got 2 days of time decay, Saturday and Sunday, when we don't trade, coming up. So be aware of that. There is our YouTube channel. If you go to YouTube and you type Market Rebellion, that's what you'd see. And you get all of our videos. So for instance, Pete does a video every day, The Take. That's Pete's take on what he's trading early on. It occurs at 9:30 Central Time, 10:30 Eastern Time. It's live. We've got the Daily Crypto Bite a half an hour before that at 10 a.m. We've got my 60-second video that goes off every business day, 3 at 3 every business day at 3 p.m. Eastern Time. And we also put up AJ Monty and a host of our other programs when they are packaged and put out there. If, for instance, like the one I did with AJ Monty yesterday, if you'd like to see it, it is now up on YouTube. So if you couldn't have watched it live because you were still at work and we did it right at the market close, you can go over to YouTube and subscribe, as well as click that little bell right next to the subscribe button. And that would alert you that we've got a new video out and you could go see it for free. This is completely free. Now let's take a look at Twitter. TWTR, Twitter, bearish put buying. Yeah, stock's $66 and they're buying the 6250 puts that are 2 full weeks and 1 day out into the future. May 7th expiration. So these are not options that are expiring this week or next week. They're expiring the entire week after that. 6250, so it's approximately $3.50 below the market. These are puts. Puts are bets that the market goes down, not bets that the market goes up. So 10,000, a million share equivalent went off in this one. Why a million shares? Because every option is for 100 shares of stock, which means that when they buy 10,000 of them, add 2 zeros to that, and you get a million. Somebody wants to be protected or betting on a million share drop in the stock by purchasing 10,000 puts. They could sell a million shares of Twitter at 6250. That is like an insurance policy on Twitter, and or a bet that it goes down. Either way, we like to follow when a big trader steps in and does that. So they have earnings that are coming out at the end of next week. And maybe that is why they want in on these puts now. There is a graph that shows you Twitter has already sold off from the approximately end of March high of around 78 to where it is now at 64.90. So it has already slipped some because, as you see, it was 66. Now it's 64.90. It's down $1.10 from when we cited that activity. If you'd like to have been in on that $1.10 drop in the stock, I guess you'd have to be a subscriber, because otherwise you're hearing it from me here. Now, does that mean I no longer have conviction in the trade? I am still in the trade. I'm just letting you know that if you're a subscriber, you may have profited even more. But again, we don't pull the trigger for you. We can't enter or exit trades for you. You have to decide if this is an appropriate investment for you. You can learn more about that by going to marketrebellion.com/UOA. That stands for unusual option activity. That is marketrebellion.com/UOA. And the third and final of our 3 at 3 today is EMR. Also puts, bearish, put buying. Stock 91.82. All right. Which puts are they buying? Puts that are $10 out of the money, nearly $10 out of the money. So they're paying 90 cents for those puts. Bought 2,500 of them. Is it just protection? Well, this was more than the open interest. It could be. But when people want to buy something fast, like puts or calls, we like to follow them. This is not an extraordinarily big trade, but given what occurred today with the president talking about capital gains and so forth, maybe we'll see a lot more put action with people looking to lock in and protect some of their gains or bet to the downside. There is EMR now. Emerson Electric trading 91.83, as you see. From the February lows at 79, it has moved up nicely by about, what would that be, $12, give or take, 12, 13 bucks. Maybe that's why somebody wants some protection right around that 82.5 strike. Bang. Questions? Yeah, you want to send questions in? Happy to take them. Send them to us on Twitter at Jon Najarian. That's me, my Twitter handle, at JONNAJARIAN. Let's take a look at lumber. Story of money. And his handle or her handle is at the story of MONEY, money. Hi, John. Do you see lumber going parabolic in 2021? It has already gone parabolic, story of money. So do I see it going a lot higher? At some price point, I think people ease off and wait because we're seeing a pretty massive surge in the price of lumber. There you see price of lumber up over 200%. No inflation though, right? But lumber's up 200%. Pre-COVID levels may never return. I love it when anybody says something like never. So I don't think that it goes parabolic. I think it already has gone parabolic. I think low interest rates are a driver of home construction, and that is, of course, a significant demand on the lumber side. But I think you end up hitting a wall with how much people will pay, and instead they'll just put it off and wait. And we'll have to see whether or not that's what they do here. That's my answer, story of money. Let's talk about fuel cell, because building an empire, whose handle is Evil Lord. Okay, Darth. Hi, John. Could you explain the way you would play FCEL? Huge, unusual option activity that expires tomorrow? Thank you. Yeah, Evil Lord. I think, Lord Vader, that this one, I pulled it up on our charts, and that's what I saw, which is that look at where they opened today, those April 23rd, 1050 calls, which are the ones he's citing. They opened this morning at 36 cents with the stock at 1039. Then the stock got whacked. And as the stock got whacked, they've traded down to 6 cents. That's just, what happened from the beginning of the trade today till now. So in other words, those calls have lost most of their value already. It's now a leap for those calls to go in the money. So I think you're right. It's unusual option activity. We do not show that most of it was buying. We show most of it as being on the sell side. So yes, the stock rolled over, but also people were hammering out calls. I'm not sure if they were making a profit on those calls or if they were just selling calls against their stock to try to mitigate some of the downside exposure. But in any case, no, I don't see a smart way to play this one unless you just want to buy the 950 calls and play for some sort of a rebound, because asking it to jump all the way back a buck, that's asking a lot of the stock. Let's see, play safe. Izzy, whose handle is VIPERSIII, Viper SIII. Hi, John. Hey, John. How come nobody ever talks about PlaySafe? It has DraftKings, Spotify, Roblox, Fortnite, Snowflake, and now Coinbase as customers. They're profitable and they're trading at 13. Have a great day. You have a great day too, Izzy. They just, for whatever reason, they haven't bought into this idea that PlaySafe is going to break out. Now, that's good for somebody like you or anybody who's playing PlaySafe, because maybe it's like a coiled spring. They've had a lot of good news, and yet they haven't been recognized for that good news. I'll be happy to jump in with you and play it, no pun intended, just checking out a quick one. PSFE, seeing if we have any stuff hitting later today. Nope, we don't. So I wish I had something, Izzy, but I don't have unusual option activity that I can clue you in on for this one. So I think the story is great, but apparently people not impressed. They need something else to be impressed, apparently. And let's do one more, shall we? Shanaz Alvi, and it looks like a whole bunch of different flags there. Thank you, Shanaz. His handle is at SHAHNAZ_Alvi, ALVI. This is a follow-up that you covered, in which I thought the 10-year rate was going up to 2% by June, 2.5% by SEP, and you agreed on 2%, but not 2.5%. So what are your thoughts now that the 10 years pulled back to 155? And was Mr. Tapper, and Mr. Powell correct that this was temporary? Yeah, it seems to be transitory. It seems to be temporary. But I do think we'll finish the year closer to 2 than we are right now. But I don't think 2.5% is in the cards, because I don't think it's so much of a global synchronized move. I think right now, with Europe struggling, they are not seeing the sort of upside that they need to see to get those economies really raging and to help that be a global synchronized recovery. So instead, if Europe lags by 3 or 4 months, which they have been with vaccinations, and maybe we don't even get to go over there this summer for holidays, which is bad for the big airlines and so forth, but perhaps priced in with this 11% sell-off in the last few weeks. I think that 2% is the high for the year if we get there. Thank you very much for the question. All right, well, that does it for today, folks. As always, please go to our YouTube channel, type in YouTube, and then in the search bar, hit Market Rebellion, subscribe, tell a friend about it. We always appreciate that. Remember, if you want to learn more about options, if you'd like coaches, mentors, if you'd like distance learning, we have all of that, as well as subscriptions to so many services. I can't list them. Just go to marketrebellion.com and check it out. Thank you for joining me. Have a great day. I'll be on the halftime report tomorrow, so I guess I'll see you then. Bang.